Hey everyone, welcome back to Corporate Decoder, the place where we try and make sense of the madness that companies try to hide in their filings. Today we're diving into an S-4, a filing from Coeptis Therapeutics Holdings, Incorporated, and boy oh boy, is there a lot to unpack here. We're talking about a merger, a spin. Often a whole lot of financial jargon that would make even the most seasoned investor scratch their head. If you are curious about the future of Coeptis and what this whole deal means for its investors, make sure you are subscribed and join our Discord community linked in the description below. So this filing is an amendment to a registration statement indicating a significant corporate event is unfolding. Think of it as a major company update that needs the Securities and Exchange Commission's blessing before it can happen. At its core, this is about Coeptis merging with another company called Z Squared Inc. and simultaneously spinning off a part of its own business. It is a complex maneuver designed to reshape the company's future. The main event here is a proposed merger. Coeptis is essentially combining its operations with Z Squared Inc. The details of this merger are pretty wild. Z Squared is in the business of cryptocurrency, mining Dogecoin and Litecoin specifically. Coeptis, on the other hand, is a biopharmaceutical and technology company. So we're talking about a biopharma tech company merging with a crypto mining operation. That is certainly a bold strategy. Now the reason we're seeing this document is because Coeptis shareholders need to vote on this deal. It is not just a simple yes or no. There are 9 separate proposals that Coeptis stockholders are being asked to approve. These include approving the stock issuance for the merger, approving a spin off of Coeptis biopharmaceutical operations, changing the company name to Z Squared Inc., approving a new equity incentive plan and electing new board members. Essentially, for the merger to go through, the shareholders have to give it the green light on multiple fronts. Why do this complicated dance? Coeptis states that the merger is expected to create a company with strong leadership and substantial capital resources. And importantly, for existing Coeptis shareholders, they get to keep a piece of the biopharmaceutical business through a spin-off. So they're trying to create a new digitally focused entity while letting go of some of the company's original biotech roots. Now you know it is an SEC filing when there is a whole section dedicated to risk factors. And this filing has plenty. They meticulously detail the risks around the merger itself. The risks related to Coeptis' business, including substantial doubt about its ability to continue as a going concern, which is always a red flag. Then there are the risks specific to Z Squared's crypto mining operations like cryptocurrency price volatility, regulatory uncertainty, and the energy-intensive nature of mining. It is a long list, and it underscores that this deal is far from a sure thing. The company itself admits it is hard to estimate the market value of Z Squared, and that a failure to complete the merger could result in significant termination fees and harm the market price of Coeptis stock. So there is a lot of risk on the table for everyone involved. Let's talk financials. The company has a history of losses and expects to continue incurring them in the near term. For the 9 months ended the 30th of September 2025, Coeptis reported a net loss of over $10 million. For the year ended the 31st of December 2024, that loss was also over $10 million. This is a significant amount of red ink. Their revenue is minimal, mostly from consulting and product sales, and management itself states there is substantial doubt about the company's ability to continue as a going concern. This means they're saying they might not be able to stay in business without new funding. Now let's look at Z Squared. The company plans to mine Dogecoin and Litecoin using specialized ASIC miners. They're projecting a robust operation across multiple locations with an average energy cost of 8.8 cents per kilowatt hour. They even provide a break-even analysis showing the Dogecoin price needed for profitability depending on the miner type and energy costs. This kind of detail is what we love to see. They're estimating break-even Dogecoin prices ranging from 10.7 cents to 21.2 cents. This operational diligence is a positive sign even with the inherent risks of crypto. Flipping through the actual financial statements is where things get even more interesting. For Coeptis, the numbers really highlight that going concern issue. Their accumulated deficit is a staggering over $108 million as of the 30th of September 2025. Their net loss for the 9 months ending then was over $10 million. Even for the year ended the 31st of December 2024, they posted a net loss of over $10 million. This is a company that is burning through cash very fast in its biopharma operations. Z Squared's financials are starkly different. As of the 30th of September 2025, they report zero cash and zero assets. They have liabilities of just $120 and an accumulated deficit of $120. Essentially, they are pre-revenue, pre-operations, and are almost entirely a shell company with some planned future structure. Their financial statements reflect this developmental stage very clearly. It is important to remember this is before the merger and asset acquisition. This section is where we see the potential combined company's financial picture. The pro forma balance sheet as of the 30th of September 2025 shows total assets over $131 million. However, a massive chunk of that is goodwill over $90 million, which is basically an accounting entry for the premium paid in an acquisition. The combined company shows a net loss of over $19 million for the 9 months, ended the 30th of September 2025. This highlights the significant losses being combined and the potential challenges ahead. We see the company's strategy is to mine Dogecoin and Litecoin, and then quickly convert those mined assets to fiat or stablecoins to avoid the price volatility. That's a smart risk mitigation tactic. This is where the valuation comes in. Sunday Business Valuations was brought in to assess if the deal was fair financially. They concluded that the merger consideration is fair from a financial point of view to Coeptis shareholders. They put a value of around $660 million on Z-Squared's mining assets. But they also acknowledged that Z-Squared's actual machines are L7 miners, not L9S, as initially valued, which is a minor clarification, but shows due diligence is ongoing. They also estimate the current Coeptis shareholders will retain about 11.21% of the combined company. That is a significant dilution. Looking ahead post-merger, the leadership team will see a big shake-up. David Halliburton from Z-Squared is set to be the Chief Executive Officer, and Michelle Burke, co familiar face from Coeptis, will continue on. Brian Cogley will remain Chief Financial Officer. The board of directors will also be significantly influenced by Z-Squared's nominees. This signals a clear shift in the company's strategic direction towards Z-Squared's business model. David Mahalik and Christopher Calise from the old Coeptis leadership team will transition to consultant roles for the remaining biopharma operations. This is effectively a handover. LookMe take on this is that it is a high-stakes gamble. Coeptis is in financial distress with substantial losses and doubts about continuing as a going concern. Merging with a crypto mining company Z-Squared, which is essentially a pre-revenue shell company, at this stage is a very aggressive strategy. The valuation of Z-Squared's assets from Sunday Business Valuations is a key figure, but it is based on estimates. The diluted ownership for current Coeptis shareholders is significant, and the company's future hinges on the volatile crypto market and on successfully integrating two very different businesses. The risk factors are extensive. The company is betting heavily on the mining operation to turn things around. It is a high-risk, high-reward play. We'll have to watch closely to see if this bold move pays off or if it is a desperate attempt to pivot away from a struggling biotech business. Alright, that is our deep dive into the Coeptis and Z-Squared deal. What are your thoughts on this merger? Are you bullish on crypto mining, or do you think Coeptis is betting on the wrong horse? Let me know in the comments. If you found this breakdown helpful, hit that like button and subscribe for more corporate secrets revealed. And don't forget to jump into our Discord server linked in the description below to continue the conversation. Thanks for watching, and we'll see you on the next episode of Corporate Decoder.